Good morning, good afternoon, and good evening. Welcome to the 35th edition of the Hodlnots Weekly Warm-Up. I'm John.
I'm Vicky.
Well, let's get into some of the news making headlines, crypto headlines over the last few days.
Yes, and one of the reasons, or one of the headlines, is about Bitcoin, obviously. That's the main headline always. And there are possibly three reasons why Bitcoin might have dropped $8,000 in days. So the first one is the US Fed in the States. And although essentially all investors and experts were expecting no changes to the key interest rates in the US from the Federal Reserve during its second meeting of the year, Chair Powell's hawkish speech after the event brought some more pain for risk-on assets like crypto. So, after his second to last meeting, the current chair said the central bank remains concerned about stubbornly elevated inflation, especially since the war in the Middle East pushed oil prices up by double digits. So, that's the first possible reason why Bitcoin dropped. The second possible reason is the war itself. So, the ongoing and quickly escalating tension in the Middle East might be another major reason behind Bitcoin's recent correction. And this was more evident on Sunday morning when the cryptocurrency fell by a few $1,000s in minutes after President Trump threatened to obliterate Iran's power plants if the country doesn't safely reopen that Strait of Hormuz. And the third reason could be an ETF reversal. So the spot Bitcoin ETFs enjoyed a healthy streak, 7 consecutive days in the green from March 9th to March 17th. Its peak price was 76,000, and it came just as the inflows tapped 200 million on Tuesday. But the 3 days after the 3 days that followed that were quite the opposite. So investors pulled out 163 million on Wednesday, another 90 million on Thursday, and 52 million on Friday. Although the week ended with a net positive of 95 million, the last three trading days saw more than 300 million being pulled out, which coincided with the asset's price correction. So those are three possible reasons why Bitcoin dropped. We'll never know. And also, as John will see, or show us in a moment, we trade what we see, and there's lots of other coins popping. So we'd like to know why Bitcoin or might drop, but we really don't pay much attention to it.
Sure. Meanwhile, Bitcoin has held 68,300, well, currently it's 68, just 400, as gold has crashed for its ninth straight day. One of the biggest drop since 1983, funny enough, amid the Middle East tensions. And the Asian stocks have dropped. Everything is selling. Bitcoin is selling the least, however. Gold has dropped for a ninth straight day to around $4,360 last checked, its longest losing streak in years. Asian stocks have fell for a third session and are set to enter correction territory as well. Now, this is another opinion piece. So you guys all might remember Scaramucci. He was for a few days the communications director in the White House quite a few years ago. He's been in the finance sector for a long time. Now, Scaramucci says that Bitcoin's 4-year cycle is still in play. So this is an opinion piece. Now, the current Bitcoin bear market can be explained by the 4-year cycle, and long-term Bitcoin holders are selling around the 100,000 psychological level, according to Anthony Scaramucci, who is a managing partner at Skybridge investment firm. Now, he says Bitcoin's 4-year market cycle has been muted by institutional investors and inflows from Bitcoin exchange traded funds, ETFs, that have cushioned the volatility. He says that the altered market dynamics have not fully erased Bitcoin's traditional cycles. He says further, we're in a 4-year cycle, and there were some traditional whales, some OGs that believe in the 4-year cycle, and guess what happens in life? When you believe in something, you create a self-fulfilling prophecy. Bitcoin will continue to see choppy price action for most of the year until the fourth quarter of 2026, when prices will start to rise again in a new bull market cycle. Scaramucci has also said that market participants, including himself, were widely expecting Bitcoin to climb to about 150,000 in 2025, driven by US President Donald Trump's pro-crypto agenda and US regulators warming up to the digital asset industry. However, the October market crash would drag Bitcoin down from that all-time high of about 126 to its recent low of 60,000, completely shattered widely held consensus. Now, markets often move in opposite ways to prevailing investor sentiment, Scaramucci has said, citing Bitcoin's price action in the early months of 2023, following the November 2022 collapse of the FTX exchange, as an example. He says it was a period of great disinterest and great apathy, that's when the bull market started again, adding that the current Bitcoin bear market is a garden variety correction in line with previous downturns. Apologies. To be sure, crypto industry executives, analysts, and market participants continue to debate whether Bitcoin's four-year cycle theory is valid after Bitcoin ended 2025 in the red, or if changing market dynamics have permanently altered how the price of Bitcoin moves. Now, we've said this before, ladies and gentlemen, we'll continue to say this. Despite what might happen, we continue to trade what we see.
Exactly. And interestingly, though, even after that story and after what's happening in the world, the institutional investors are actually bullish on crypto right now. Take it for what you might get out of this. But as for a Coinbase report, 73% of those investors plan to put more money into cryptocurrencies in 2026, and 74% think prices will go up within a year. At the same time, almost half, which is about 49%, said that they would be putting more emphasis on managing risk, managing liquidity, and position size given the volatility of the market at the moment. So furthermore, the study found that the default entry price is now regulated products, with 66% of respondents already having spot crypto ETFs or exchange traded funds, and 81% saying they would rather access crypto through a registered vehicle. So according to the survey, stablecoins have moved well beyond this theory, with 86% of investors already using or looking into them for cash management and money movement. Companies are also putting in place formal rules for cryptocurrency risk and reserve transparency so that stablecoin workflows can fit into their existing controls. So this is actually exactly what you just said about ETFs and also what we have been saying about stablecoins. So the institutional adoption is interesting on both of those, and that could be what's also affecting the market at the moment.
Absolutely. And now, talking about from a cryptocurrency adoption point of view and regulation, is that currently lawmakers in the states and the White House have reached an agreement in principle on the Clarity Act. A reported agreement in principle between the White House and US lawmakers on stablecoin yield could advance the Clarity Act, according to a report. Republican Senator Tom Tillis and Democratic Senator Angela Alsobrooks, both members of the Senate Committee on Banking, Housing, and Urban Affairs, have reached an agreement in principle, according to this Friday report. This is according to also Brooks saying, I think what it will do is allow us to protect innovation, but also give us the opportunity to prevent widespread deposit flight. Adding that the deals prohibit stablecoin yield on passive balances. Now, specific details on the prospective deal have yet to emerge, and Senator Tillis said the crypto industry, must vet the agreement before it is finalized. Now, speaking at the DC Blockchain Summit on Wednesday, Wyoming Senator Cynthia Lummis, one of the biggest advocates for digital asset policy on the Hill, said, we are so close to passing a comprehensive crypto regulatory framework. Now, a spokesperson for her said on Wednesday that a deal is expected to materialize in the next few days, and that Senator Lummis is working to hammer out ethics language in the bill. Now, the Digital Asset Market Clarity Act of 2025, known as the Clarity Act, is a major piece of crypto legislation and was expected to pass with limited resistance after the Genius stablecoin framework was signed into law. However, the bill stalled in January after major industry players, including crypto exchange Coinbase, voiced concern, including whether stablecoin issuers could share yield with token holders. Now, the banking industry opposes yield-bearing stable coins, citing concerns over the flight of bank deposits, which have yields far below 1%, and thus the erosion of banking market share as well. Now, we will continue to talk about these bills in the US because a lot of countries are following what the States is doing in terms of these regulations, acts, and bills. And so these kind of things affect even you and I, even if we're not based in the States. So we'll keep you guys updated on that and perhaps a little bit more on that in this month's or this week's happy hour hangout later on. But more details on that later. Let's get into the next story.
Yes, and another thing that's been in the news a lot over every sector of the world really is AI. And this is an interesting one because an experimental AI agent broke out of its testing environment and mined crypto without permission. So, an experimental artificial intelligence agent broke from the constraints of its testing environment and used its newfound freedom to start mining cryptocurrency without permission, as I just said. So, dubbed Rome, ROME, the AI was created by Chinese researchers at an AI lab associated with the giant Alibaba as a means to develop the agentic learning ecosystem. So, although Rome excelled at a wide range of workflow driven tasks, such as coming up with travel plans and assisting in graphical user interfaces, the researchers discovered that it had moved beyond its instructions and essentially broke out of the sandbox testing environment. So they said we encountered an unanticipated and operationally consequential class of unsafe behaviors that arose without any explicit instruction and more troubling outside the bounds of the intended sandbox. So it's important to note that this Rome didn't go rogue and it chose to mine cryptocurrency by way of conscious decision making. Rather, the researchers noted that the behavior was a side effect of reinforcement learning. So this led the AI agent down an optimization pathway that resulted in the exploitation of network infrastructure and cryptocurrency mining as a way to achieve a higher score or reward in pursuit of its predefined objective. So Skynet is not with us just yet, but it's actually getting there because they're getting smarter and smarter.
Absolutely. So that's it. What else is also on the rise, and we speak about this pretty much in every single weekly warm-up, is scams and other ways that people are losing money. Now, so the next few stories are around that, and that is not just to poke fun at them, but it is actually to highlight what could happen to you and I if we are not careful. And this goes for people who are using phones, PCs, whether it be Mac or Windows or otherwise. So please pay attention to these and hopefully you'll learn something from them. Now, Google threat intel. They have flagged something new, a new malware that steals crypto and it's called Ghost Blade. So Google Threat Intelligence has identified a new form of crypto stealing malware called Ghost Blade that affects Apple iOS devices. And it's part of the Dark Sword suite of browser-based malware tools designed to steal private keys and other sensitive information. Now, Ghostblade was written in JavaScript and is designed for rapid data theft. The crypto stealing malware activates, grabs your sensitive data from a compromised device, and relays it to malicious servers, according to Google Threat Intelligence. Now, the Ghostblade malware does not run 24/7 on the compromised device, does not require extra plugins to function, and stops functioning after extracting the data, making it much more difficult to detect, according to research or threat researchers. Now, the malware also includes code that deletes crash reports from the compromised device, preventing Apple from receiving them and flagging the malicious software. Now, Ghostblade can access and relay messaging data from iMessage, as well as Telegram and WhatsApp. Now, the malicious software can also steal your SIM card information, identity, multimedia, and geolocation data, and access system settings according to the Google cybersecurity reports. Now, losses from crypto hacks fell in February to just $49 million, a sharp decrease from the $385 million in January, according to blockchain intelligence platform Numinous. This drop reflects a pivot from code-based cyber threats to crypto phishing attempts, wallet poisoning attacks, and other threat vectors that take advantage of human error. So, ladies and gents, the more we talk about this, hopefully, the more aware you'll become of all of these. So, just because Ghostblade might be affecting Apple iOS devices, don't think if you're on Android or anything else that you're not impervious to these attacks. So, please always be very careful. But more on these other scams and malwares coming up.
And we're really not the only ones that can fall prey to scams, because FBI is warning of a token scam on the Tron network. So, according to the law enforcement agency, attackers are sending out malicious TRC20 token with the subject line FBI message, telling people to complete an AML verification, which is anti-money laundering, or risk having their assets blocked. This message directs users to a fake website where it prompts them to submit their personal information. So the FBI advised anyone who gets the tokens not to visit the site or to give out any personal details. It also urged the victims who may have already shared their identity information to report the matter to the agency's Internet Crime Complaint Center. So the FBI is being targeted and used to gather information. So it's a minefield out there. You just can't click on anything, really. As well with an Apple device, I think people with Apple devices get a little complacent because the way they they partition their software, but sounds like it's not a thing anymore. They can get past that.
Absolutely, they can get past
Mm-hmm.
anything and everyone. And as we mentioned
Mm-hmm.
in the previous story, is that more often than not, it is a human error. Now, ladies and gents, we know that these are emotional times. There's war going on, price of fuel is going up, and people are worried about their livelihoods and making money. And this is the time to be extra careful of potential scams. And this is exactly what happened to a Hong Kong retiree who has lost now, not once, not twice, but three times money, up to the total value of 840,000 US dollars. So a 66-year-old Hong Kong retiree has lost 6.6 million Hong Kong dollars, roughly about 840,000 US, in a string of three related crypto investment scams after repeatedly trusting self-proclaimed virtual currency experts who reached out via WhatsApp, according to the Hong Kong Police's Cyber Defender Unit. Now, in a March 20 Facebook post, police said that the victim was first approached in September last year by a scammer who contacted him unsolicited via WhatsApp, claiming to be a virtual currency investment expert and promising steady gains if he followed his advice. The victim transferred 180,000 US and deposited that crypto into a wallet controlled by the scammer, who then disappeared, prompting a police report. Now, the case shows how fraudsters can recycle the same victim through successive schemes that start with guaranteed profit pitches and escalate into offers to recover funds that have already been stolen. Life has no take two, but scams can have take three. This is what the Cyber Defender team has written, warning that genuine professionals do not rely on random outreach and that phrases such as guaranteed returns and inside information are classic red flags. The victim later searched online for another crypto expert who claimed he could help recover the missing funds but demanded $75,000 as a security deposit. In January, a third supposed specialist messaged the retiree on WhatsApp offering to reclaim both prior losses if the victim bought $585,000 worth in crypto and send it to a specified address. Once the victim complied, that scammer disappeared as well, bringing the total losses of over roughly 6 months to approximately 840,000 US. Ladies and gents, always do your research. Do not believe in these pipe dreams. All right. This is why we learn to trade for ourselves. No one else is going to make you money except for yourself. Over to you.
Yeah, and the scammers are getting more intricate, really, on their scams. So we now have one with is dealing with Pudgy World. I don't know if you've heard of Pudgy World out there. It has to do with pudgy penguins, which is very popular. So a fake Pudgy World site is luring gamers into handing over crypto wallet passwords. So, a phishing campaign targeting the players of Pudgy Penguin's Pudgy World game has been identified after the title's launch on March 10. It's using a fake website to steal cryptocurrency wallet credentials. So, cybersecurity firm Malwarebytes said the site mimics legitimate wallet connection flows used for in game items and digital collectibles. It's hosted at pudgypengu-gamegifts.live, and the page includes 11 tailored wallet interfaces designed to imitate different providers, indicating a coordinated and resource-intensive setup. So the attacks focus on extracting seed phrases, particularly from hardware users' wallets. When the spoofed connection process fails, users are redirected to a manual input option that requests recovery credentials, which are then captured by the attackers. So there's been no public response issued by Pudgy Penguins at the moment, but as John just said, that is actually also user human error. It's very intricate. These, oops, I've done this wrong. Oh, let me just do this. Yes, I'll put that in. But please, if you ever see one of these, don't click it, don't do anything. Go to the actual site that has the game, which obviously in this instance they thought it was. But just take a moment, relax, take a big breath, collect your thoughts, and then go to the site instead of click, 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 which all happens. We get flustered, but it's getting really quite bad out there with people trying to scam crypto.
Absolutely. So, ladies and gents,
Mm,
always DYR, please check that whatever
yeah.
you're interacting with is the real thing indeed. All right, moving on from the crypto news, let's get into a little bit on the fear and greed index, Vicky.
Yeah, so the fear and greed index for cryptocurrency markets has been in extreme fear territory for the past 2 months, really. And this is the latest decline. And now its reason for that is Bitcoin is going up and down and up and down. And it's actually dipped. It's around 68,000. And it actually is trading about 15% higher than its February low. The fear and greed index is about 8 still. And that's down from last week's 23. So it actually has dipped quite a lot, even though Bitcoin only had a little dip. The fear and greed index has dipped a lot. And it is indicating that there are fear amongst traders and investors. Now, we've talked about this before, and some are saying that it does suggest that a reversal may be imminent when the fear and greed index has been there for such a long time. So people think that it's very low for a very long time, and it has signaled reversals in the past, but it's good to know what the market's doing. You look at Bitcoin when you wake up, but there are a lot of coins, which John is going to show you, that don't follow Bitcoin. So it really depends on what you're trading and what your plan is, really. So let's just have a look at a few coins.
Well, yeah, let's look at Bitcoin specifically. So yeah, we did have a few days last week where, and we had mentioned as well that we were wanting to see at least Bitcoin close up above that zone up there, and hit some resistance. And because of the war at the moment, and a lot of uncertainty, we did see, a few days last week, as mentioned, Vicky mentioned as well, Wednesday, Thursday, Friday, those outflows in the Bitcoin spot ETFs. So I think a lot of people were waiting to get up there. We did not close up about that 75,000 zone, which was really, really hoping to close up above, and that's fine. This is the way the market is moving, is that there is no guarantee, ladies and gents. Even if we had had a candle close above that 75,000 previous support, then our resistance zone, there would have been no guarantee. But this, we're just trading what we're seeing. So at the moment, as you can see, for those of you who are Hodlnots, so I have the Hodlnots indicator with all these moving averages and everything else showing us that we're still going through this last, feels like forever, the last month or so of sideways action as Bitcoin is trying to consolidate, and most of the market is trying to consolidate. But between tariffs and then obviously the wars, there is a lot going on in terms of the volatility. Fuel prices are going up, and a lot of people are making sure that their cash is still in stable coins. Obviously, because that market is growing. But at the moment, I'm anticipating a very topsy-turvy week. Bitcoin's going to have a lot of work to do to get past certain areas and certain resistances as we move along. But that said, if you're a scalp trader or even some hodl fires as well, there's plenty of opportunity. These coins, it doesn't look like a great day, but I can tell you now that if Bitcoin does manage to hold and we start to see a little push up, a lot of these old coins are going to push up beautifully and perfect for scalp traders, as well as for those who are hodl firing. And those who have been hodl firing, there's some coins that have been going for the last couple of weeks. And a lot of our traders, a lot of the hodl fire traders are able to get in our trades, over a couple of hours, sometimes a day, day and a half. using the indicator, having completed the course, and actually make money in the sideways market. So yeah, plenty of potential, but anticipate, ladies and gents, that there is going to be quite a bit of volatility over the next few days. Scalp traders in and out in a couple of minutes, take the profits back into stablecoin. And we don't mind. Obviously, we love the market to be running, but at the moment, it's not. But for those of you who are in the Hodlnots ecosystem, whether you're in the large or part of all the other products, there are a whole bunch of calls and courses actually happening this week. Vicky, tell us more.
Yeah, there are a lot happening this week. And what's happening in the lodge this week is the normal calls. So we have our self-paced course call at 12 p.m. UTC today for anyone that's doing the self-paced course and is on chapters 1 to 3. Please jump on. We like to see your face and we like to see how you're doing with the course because it is a video course. So we like to look at you live and actually answer some questions and have you see us and help you out. So that is 12 p.m. UTC today. And then tomorrow we have the normal calls, which is another self-paced course call for anyone that's on any chapter or module, and that's at 4 a.m. UTC on Tuesday. And that is followed by the lodge call, which is the normal lodge call that Wendy does at 6 a.m. UTC on Tuesday as well. And this week we do have another Hodl Fire call for our graduates, and that is Tuesday at 12 p.m. UTC. So the people that have finished the Hodl Fire course and are in the graduate chat, it is a chat, which is great. We jump on a call on Zoom, which is actually we can see each other and we talk about calls. And we've had some really good ones, as John said. So even this weekend, there were there were coins running this weekend, and the market was crap. So, Bitcoin's going up and down in this little channel, basically, and the coins went, don't care, I'm going to run anyway. So we've identified quite a few of them, and they've had some great runs on those this week and last week, and actually for quite a few weeks now. And then we have a special call actually in the lodge, and it is for what we call our black bears. So black bears are people that have finished the 3M challenge. So they have taken $40 and turned it into $2,500 over however long, because it is a self-paced challenge. And there is a call for them in the lodge, and that is at 6 a.m. UTC on Wednesday. So they trade slightly differently in there. Once you've finished that 3M challenge, you really do know how to scalp. So they do leverage trade. They actually leverage trade in there, not just use 1x. So that's an interesting call because they're going to get on and trade with each other as well. So that is on Wednesday. That's not a normal call. And then another not normal call as far as this year is concerned, basically, is our 4-H. It's the first one of the year. So it's on the 25th of the 25th of March, and that's this Wednesday, and it's at 10 a.m. UTC, so a slightly different time as well. And if you're there, please jump on. It's open to everyone, open to the public. We haven't done one this year yet. And we're just going to really have a chat about what the market's doing. So it's going to be a lot like these calls, but it's going to be expanded. We want to hear from you. What do you think? It's really interesting. We're going to have quite a few topics, and we might have a competition as well. So that is at 10 a.m. UTC, and the ad will go out soon on all of our channels. It'll probably go out today. So look out for that. And then the week continues, and not a Hodlnots call, but there is an IPO call that is going to be really important for anyone that's in the IPO membership to attend, and that is at 7:30 p.m. on Wednesday. There is some information happening with the IPO members that if you can attend, please do. So that's at 7:30 p.m. UTC, and that is followed at 8 p.m. UTC by the first of the Hodl help calls. So there's the people that are doing the challenge currently can jump on and ask any questions if they're having a little trouble scalping. And there's also another one this week on the 26th of March at 7 a.m. UTC, and Marcel will be doing that. So you get to see Marcel again, and he'll be helping out all of the Hodl daughters with anything scalping, any problem scalping. If you need to do that, please jump on. And then we also have our normal 12 p.m. UTC call on Thursday, which is for anyone that's doing the self-paced course that is on chapters 4 onwards. And then also, busy week, we have a Hodl Fire course. So this Hodl Fire course does start on Wednesday and it finishes on Friday. It starts at 1 p.m. UTC, so it is really targeted at either Europe, Africa, or North and South America because of the time. But anyone can jump on if you'd like to stay overnight, jump on. And that will teach people how to use the Hodl Fire indicator to its best and fullest advantage. Because not all the pivots pop onto the charts where you really should be trading them. There's things in the way, the trend's not right. So everyone that's done the course has really enjoyed it. And that is the course you need to take to get into our chat to actually hear all the Hodl Fire calls as well. So that is on the 25th and the 27th, and there are still spots available if you'd like to do that. Because the next Hodl Fire course is actually not until after April now. So for those of you in the Eastern Hemisphere, so Australia, basically most of Asia, and again, Europe and Africa, that will be at 6 a.m. UTC start on Wednesday, the 8th and the 10th of April already. My gosh, it's April already in the next couple of weeks. So that's there. So if you'd like to do the Hodl Fire course, it is one again this week or after April. And that's what's happening in the lodge at the moment. Lots and
Lot
lots of
happening,
things
ladies and
to do.
gents. Lots of
Yeah.
opportunities as well within Bitcoin Trade and Forecast, specifically Hodlnots, in which to ask questions, learn some more, and participate as well. It's really time in the market is something we all need to be practicing, spending time learning to trade. If you guys are wanting to be successful in your trading, you're going to have to spend some time doing these, and there are plenty of learning opportunities, at least within the Hodlnots ecosystem as well for all of you. Well, thank you all, ladies and gents, for joining us for the Hodlnots weekly warm-up. Vicky's going to leave us with the final thought for the week.
Yeah, and look, in light of this market, we've been watching Bitcoin and we're going, oh, it's finally running. Oh, no, it's not. Oh, it's finally running. Oh, it's not. It's really just been in a channel. But there's a lot of emotions that come with that because we think we're finally our portfolios are going to get, oh, no, they're not, and up and down. And I'm not talking about the trades that we do, the HODL fire trades and the scalping trades. Those are great, but just the emotions if you're holding long-term coins and actually any kind of trading. But it is like a roller coaster, and the downs shouldn't be unexpected because roller coasters are going to go up and down, but you just have to be aware that they're coming and have some kind of plan for it. So that is the thought of the day. It's going to be up and down, up and down, up and down forever. You just have to plan for it.
Absolutely. Ladies and
Mm.
gents, well, on that note, we'll catch you guys on the upside, on the flip side, and on all the other sides during this week and next week, Monday again. Until then, ciao, ciao.